Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Just about half an hour left for the markets to close today. It's been a good day and the market's done well. Ashwani Gujral and Mitesh Thakkar with us for BTST calls. Ashwani, you go first. Thoughts on index and your stock calls?
See, my sense on the index is that 11,500 may get crossed much more easily than people expect, because this sort of a recovery and very little give back through the course of the day just means that the market is stronger. It's taken Turkey in its stride, currency depreciation, all kinds of bad news, and is closing towards the high point of the day. Plus you have now the pharma space which is throwing in its towel for participation. So there is way too much going for the market to have a really big correction. So I don't have a problem even carrying the Nifty and Bank Nifty home even for the holiday, because the testing of the market has been done. Bad news thrown at it. It didn't really collapse. So my sense is that 11,500 should be a matter of time, and you will see huge short covering. At least don't take home short positions if nothing else. For the moment, I think Thursday will be a large pharma day. So Godrej Property is a buy with a stop of 710, target of 745. Dr. Reddy is a buy with a stop of 2260, target of 2340. And Sun Pharma is a buy with a stop of 590, target of 615.
Sure, Ashwini, take your point about large pharma moves. Almost everything in the sector is moving now, including names like Wockhardt, Strides Shasun. The bigger names like Dr. Reddy's, of course, Lupin. All of the pharma stocks are up and about. Mitesh, let's get your calls as well for the last half hour.
Yeah, so I think Sun Pharma features on my list as well. It's a buy with a stop at 589 for targets of around 630. Though, as I said, I think earlier, the longer-term targets could be in excess of 700 here. And Biocon is a BTST with a stop at 577 for targets of 594.
Okay, those are some BTST calls. Let's see if we have sorted that audio with Pankaj Pandey. Pankaj, since we are discussing pharma, let's discuss your pick as well. IPCA is a stock that you like, which is interesting.
Yes, Anuj. So on IPCA, we have a target price of 845. So if you look at the last 4-5 years, the company did not do much. So the sales growth was pretty muted at about 3% and also because of the fact that they had 3 import alerts on the plants, which was impacting their capacity utilization, and also there was a good chunk of business coming from the anti-malarial business, which was volatile. So as a result of that, the overall performance in the last 4-5 years was quite muted. But what has changed is that domestically we are seeing a decent growth of about 14% compared to a historical growth of 10%. Now compared to anti-malarial segment, the growth in pain management has been far more higher, and this business now contributes about 14% and has been growing at a pretty healthy clip. So we expect domestic formulation, which contributes about 43% of the business, to grow at about 14%. On the export side, we expect the growth to inch up from about 6%, which was there a few years back, to about 15%, largely because of the institutional tender business. So both domestic and export formulation should do well, and then you have API business, which should be chipping in with about 12% kind of a growth. Now all this growth will lead to a good margin expansion. So we are expecting about 200 bips kind of a margin expansion to about 16% in FY19, which is what also the management has guided. And we expect a further improvement in EBITDA margins by 300 bips to about 19%. So that should lead to a good delta in EBITDA of about 33% and about 49% in profits. And ROS also should improve to about 17-18% in the next 2 years. So at 20 times FY20, we get a target price of 845, and we believe that this stock should do well going forward.
Okay, by the way, just reading some comments from Dilip Shangvi, and the reason I want to mention that is keep an eye also on Sun Pharma Advanced Research Spark, because he's talking about 2 specialty products, Celpros and Ellipsia, filed from Halol. These 2 drugs actually belong to Spark. So, that I think is the reason that I want to watch out for that stock as well. And those are comments coming in from Dilip Shangvi. In fact, it's in the press release that Sun Pharma has just filed. So that's the reason. And of course, normally you see that kind of move, post move in Sun Pharma. The Spark stock also follows. So that stock right now up about 7.5%.
Oh, absolutely. It's been quite a day for both the Sun Pharma twins, or the Sun Pharma and Sun Pharma Advanced Research, both of those stocks. Pankaj, I'm looking at your next pick, which is Majesco. This is an interesting one. I mean, this is one mid-cap IT stock that hasn't done as well as some of its peers. I think you have a 710 target on it. What makes you so optimistic on Majesco?
So if you look at last 2-3 years or past 3 years, the company has been growing in at 16-17 odd percent in terms of top line. We would expect largely the top line run rate to sort of be maintained. So dollar revenue growth could be about 14 odd percent, and the balance coming from currency tailwinds. But what has changed is that the company has started making profits. So 2 years back, they were making losses of about 7.5 crores. Now they are making marginal profits. So they did about 2.8 crore kind of a profit in FY18, and in Q1 their margin profile improved significantly to about 8.2 odd percent, and mind you, they were making margins of about 2.8 odd percent a year before. Now because of that, we would see a good bump up in profitability, and this is also coming from the fact that now what we see in their business is that the business segment profile is sort of changing. So they're getting 1/3 or 36% of their revenues from iCloud, and they've got a good deal pipeline, and 80% of this deal pipeline is coming from iCloud. So what we expect is that the margin profile will keep getting better to about 10.5% in the next 2 years, and so that should help them deliver about 60 crore kind of a profit in FY19 and about 77 crore kind of profit in FY20. And if you look at from a valuation perspective, see, the industry leader, which is Guidewire, is trading at a substantial multiple. So even if we are giving at 4 times EV by sales basis, which is again a 50% discount to Guidewire, we are getting a value of about 710, given the fact that the Indian entity holds 70% in the US business. So even after that, we are getting a significant upside, and with the kind of delta what we are seeing on the margins, and mind you, they spend a good amount of their money on R&D. So about 14% of their revenues spent on R&D. So since it's a product business, you need to spend that kind of R&D, but those benefits are really not visible at this point in time in terms of the bottom line what we see. So we expect that going forward with higher traction, the margin profile will keep getting better, and this company will start getting better traction on the profits and even in top line as well.
Okay, turning out to be a big pharma day, by the way. A lot of pharma stocks moving to high point. I think Biocon has been the other stock which has been making a move. Lupin is up about 3%. Sun Pharma, of course, is the biggest gainer, but Divi's Labs, so a lot of these stocks doing well. Pankaj, final stock, Transport Corp?
So on Transport Corporation, we have a target price of 400. We believe that this will be the biggest beneficiary of GST implementation, higher axle truckload, and higher regulatory scrutiny which is going to happen subsequently because of EVA bill and all that. And now what we like is that, so if you look at their basic business, which is your freight business, that used to contribute in excess of 50 odd percent. Typically this is a low ROS business, so about 12-13 odd percent. And now this this as a segment was not growing until FY17, where the growth was about in single digits, about 3 odd percent. This segment has started doing well from FY17 onwards, and we are seeing growth rate of about 13-14 odd percent. But what we really like about this company is the supply chain business, which now contributes 40% of the top line. Last year it grew about 24 odd percent. This particular quarter about 19 odd percent, and this business has a good ROC of about 22-23 odd percent. And besides that, they have a shipping business also, which is also a decent business with 11% contribution to overall top line and decent ROCs. But what we expect is that the company has been doing is looking to do a capex of 250 odd crores, which will be largely in these two businesses, which are high ROC in nature, and that should sort of improve the overall ROCE profile of this company going forward. And it is available at about 11 times. So which is why I believe that with improved ROCs and better or higher share of supply chain business, which is a sticky business, I think the company will command better valuation, and which is why we believe that 400 target price for this stock should not be a big task.
Okay. All right, Pankaj, thank you very much for joining in and bringing us all of those interesting picks. Those are from ICICI Securities. By the way, more stocks on the move. Should keep DHFL on the radar as well. Actually, both the stocks from that stable, HDIL and DHFL, both of them have had a good run today on the back of results. DHFL almost 5.5–6% higher now. That's a big move on that stock. Anand, any thoughts on DHFL in specific or any of the other housing finance plays? This one in particular came out with blowout numbers, very strong disbursements, asset quality in control.
Well, yes, I mean, obviously it's a sector which is doing very well, as is everything to do with lending and consumer finance of any nature, whether it is housing or consumer durables and so on. The only issue is that, this is the one sector that is most prone to any kind of margin contraction. So if the interest rates were to remain firm, I think you will find that this will become a little more difficult for the NIMs to be managed. For now, of course, the growth overshadows everything, and so long as the risk profile doesn't become significantly worse, I guess the market will continue to value it reasonably, because it's among the most cheapest housing finance companies anyway. So, the key issue to watch out for would be a contraction in NIMs or an increase in the LAP portfolio, which can perhaps increase some of the stress. Otherwise, I think you're on a reasonably good wicket.
Okay, well, that's a view on DHFL. Quite a few stocks on the move. Spark we have discussed. DHFL is on your screens. Colte Patil still building on those gains. Lemon Tree Hotels is still up and about. Not a very bad day for the mid-cap universe, right, Anuj?
Good day, actually. And, Surabhi, you'll remember we went through a period where even the good news was not impacting stocks. I think what has now happened is that, you're beginning to see stocks react to positive news. Mid-cap market action today. In fact, the mid-cap action, as we discussed, even yesterday for a market like yesterday, how it was not too bad. You had the index down just about, I think, 0.5% or thereabout. So that way, I think the sense you get is the worst of that mid-cap price action is perhaps out of the way, and now you're beginning to see stocks that, I think DHFL is a classical case in point. It's a stock which is not close to its low. It's in fact a stock very close to its highs. But still, the kind of rally that is seen today. Balkrishna is the other example. I think 2 or 3 days back we had Amara Raja's numbers, and from that point the kind of rally that we have seen in that stock. Apollo Hospitals is the other example. So. And one, the point here is quality of stocks. If you're in decent quality stocks now, once again, you are in a space where your portfolios are making money. We went through a period where the market was at new high, portfolios were not making money. I think the last few days, barring yesterday, of course, yesterday we had that one-off decline because of Turkey. Barring yesterday, the overall mid-cap market action has been quite good in this market.
Oh, absolutely, mid-caps, large caps, everything's firing away, including an ICICI Bank, by the way. There's another wave of buying that's set in on ICICI Bank. Let's just pull it up on the screens, and let's just see how it's doing now. 330, 332. So if we see a slightly longer chart, whatever tiny dip that came in this stock has been bought. It's just marching away northwards of 300. Ashwani, any thoughts on ICICI Bank, the way the buying is now picking up?
So it had a couple of days worth of rest, and again the corporate banks are moving up. So the rally continues.
Oh yeah, the rally continues. 28,025 on the Nifty Bank, 11,438 on the Nifty 50. Curiously, the advanced decline is in favor of declines, though it's been a good day for the mid caps as well. The Nifty Junior also doing quite well. We'll take a break. More market talk on the other side.
Welcome back. Speaking of stocks on the move, the trading play is back on Titan as well. It's again getting to 926. We know what's been happening to the stock. So range bound. Upper points around 990 thereabouts and the lows around 850. Anand, just your thoughts, not from a trading bent of mind, but I mean, there's something that prevents Titan from breaking that 1,000 mark. What would your view be on the stock at current levels?
I I think, right now, assuming that nothing changes in terms of the overall market, what is happening is that more and more money is going after the top-rung stocks. I think Titan also will benefit. The numbers have been fairly good. Even the watch segment is doing very well and so on. So I think it's only a matter of time before it does. Obviously, it's not a cheap stock by any stretch. But on the other hand, so long as the growth continues, I don't see any major issue that will happen. As I said, barring anything that may change the outlook towards emerging markets.
Okay, Anand, we let you go on that note. Thanks a lot for joining us. The market closing, just last 15 minutes left. Look at the stock that's now getting counted once again. It's Bajaj Finance. Just pull out the intraday chart on Bajaj Finance. Now moving within 10 rupees of its fresh all-time high. 2.6% higher is what you have on Bajaj Finance, 28.31. Ashwani, almost approaching blue sky territory here on Bajaj Finance. What next? Could you target, say, 3,000 thereabout on Bajaj Finance?
It always remains in blue sky territory. When does it come off? See, you will get a good entry here the day, some demonetization or the consumer gets hit. Otherwise, the corrections will be mild, 50, 70 points, and again, buying will come back. So it did its consolidation in this 1600, 2000 zone. And so far, just keep hitting new highs. So 3000, 3500, I think it can keep moving higher. So at all such points, people who have it, and since I've been recommending for a couple of years, just keep adding on. Don't need to look for new stocks. Each time it corrects, add on to your position.
Okay, by the way, speaking of interesting stock moves today, two banks have managed to put on some gain. One is City Union Bank and the other is Karur Vysya Bank, which is up almost 8%. So interesting. Some banks that are on the move. Well, on that note, we're going to thank Anand Tandon for being with us. And as of now, let's get you some more market opinion. Earlier in the day, we caught up with Ajay Srivastava, CEO of Dimensions Corporate Finance Services, to get his sense on the market and what he specifically thinks of all the news that surrounds PVR at the moment.
I think it's a matter of time. It will take off previous highs. It will go to the new highs. Long back I said PVR is the new Maruti. Now Maruti has stumbled, but I think it's chance for PVR to now keep going for the next couple of years. Phenomenal market share, phenomenal product. You can't get better than this as a company. And if you're betting, of course, some may say, argue the fact that what's happening in the US, the streaming business is now taking over a lot of the customers and at a much cheaper cost. In fact, the cables are losing out, so how will the cinema survive? My guess is that, we are not a sporting nation, we are not an outdoor nation. Our only outing, by and large, is the family movie, and that will stay for some time to come. 400 million people don't really go to multiplexes. Now that's a big demand will come up. So yes, it will have a challenge from streaming services. So let's be clear about it. It will have a great challenge. But I think its market share, dominant market share, will take it forward, and there is nobody else close to it. It's not even like, like you have in two-wheelers, you have 3-4 companies, or in cars, you have 3 companies. In this segment, you have one, and then there is Inox, and then there is nobody else. So I think phenomenal. I am keeping my faith going, and I think it will be a great stock over time.
Metals, Ajay, today Tata Steel is up about 2%. It's corrected a bit from its highs, in fact, corrected quite a bit. Thoughts here on how to play this cycle?
Well, I think the big money is already out of it because it's a pure, it was for the last 1 year recovery, Anuj, was a pure recovery based upon tariffs. And I think that was the story. The tariffs had gone up and therefore you could sell at a much better price and realization improved. All these companies are heavily leveraged. And that comes to the last point that I don't think so, stock market today have factored in the real impact on our foreign currency loan that Indian corporates carry on their books with all the rupee happening to rupee and the EM currencies. I think you're going to see lots of red ink and splotches on the P&L and balance sheet as we go forward because you need to restate your loan at the, the new price of the rupee. And we have borrowed heavily in foreign exchange. Most corporates have borrowed heavily in foreign exchange. So yes, including steel companies, including Reliance, including everybody is heavily borrowed. So yes, demand side, I don't see any much traction going up either ways because we have seen how the government spending is. It's not such a vigorous one. NHI is borrowing money from the State Bank of India, which means that the budget is kind of under stress. And therefore, you would believe that the best of the steel companies in the next 6 to 9 months is behind them. I think the big ticket is out. I think now the question is, in a rising interest rate scenario, and literally all steel companies that leverage balance sheet, how will they cope with passing interest cost and the rupee dollar depreciation cost? So I would be cagey. We don't have holdings in at all in the steel sector at this point of time, but I would be cagey in terms of the next 6 to 9 months for these companies, because leverage is going to be a big killer for this segment. Tariff.
Okay, that was Srivastava. Amrish Baliga is in our studios. Amrish, good afternoon.
Good afternoon.
Thanks a lot for joining us. Much better looking screen.
Yeah.
I'm going to give you 3 stocks and tell me if you're buying any of these at current prices. Balkrishna Industries, Apollo Hospitals and DHFL.
None of them. None of them. Because mostly I have been buying a contra bet sort of a thing. Because of which, if you see the last 3-4 months, I've been talking of PSU banks. I've been talking of Pharma. Before that, I was talking of IT. IT, in fact, has given decent returns. Pharma has just started giving returns. And PSU banks, I think, over the next 2 or 3 quarters will give much decent returns from the current levels.
Is Sun Pharma still a buy?
Sun Pharma,
if you haven't bought so far as a contrarian?
Yeah, I mean, like if you're not bought so far, it's like it had given you the last, I think, 12 to 15 months to keep buying. If you're not bought, I think it's still time to buy, because this is just the beginning of the move.
Okay, that's Sun Pharma, perfect 600 on that stock. We'll take a very quick break. We'll come back and count down to the market close this Tuesday afternoon. Welcome back. So if you're going to recount today's day, well, there's a lot of pharma in there for sure if you're talking about the large cap moves, and a fair amount of financials that have contributed. We're in conversation with all our experts. Mitesh, let's just take a look at Yes Bank now at around 383 thereabouts. It seems to be approaching interesting levels. I mean, the higher end of its trading range. What would the call be?
Yeah, in fact, after the numbers, we saw some kind of choppiness come into the stock after it had rallied nicely from 330 odd zones. I think that choppiness will lead to some consolidation between 390 to about 360, but my sense is that eventually the stock will break on the upside. Once we see the stock start getting past 390, I think 430 to 450 should be our next target zone. So extremely positive here as well.
Okay, Amrish, your thoughts on the kind of move that we have seen especially in corporate banks, and what would be your top calls here?
Private sector banks, clearly, my pick has been HDFC Bank, Kotak, and then Yes Bank. And I think these banks should be in your core portfolio. And these are not really for trading. I think one should just hold on these stocks for the next at least foreseeable 3 to 4 years, if not more. Whatever I've been talking of PSU banks is more of a medium term sort of a trade, 1 year. Possible, I think maximum of 12 to 15 months sort of a play. But these are the stocks which should be there in your core portfolio.
Okay. Amrish, any specialty chemical companies on your radar? Because some of them like Meghmani reported good numbers.
Right.
Stocks have rallied today. Tirumalai Chemicals has been up 6-7%. Anything in this basket that you try?
One stock which has not really been performing too well, at least in the last 12 to 15 months, Clariant. I think that's one stock one should again start looking at, because clearly I see the margins improving from here on. If you're talking of the next 2 to 3 quarters, I think the result should be much better. And it has just bounced back from those lows of closer to about 400.
Okay, let's pull out the duo, PC Jeweler and Vakrangi. Just see the charts on both of these. PC Jeweler, of course, had a bit of a rally over the last few days, but 3.5% lower, and Vakrangi as well. I think is going home with 18% cuts right now. 16.5% cuts is what you have on Vakrangi, down quite a bit. So these are some stocks that you would want to keep an eye on. Amrish, in terms of other stocks, your thoughts on something like, say, Page Industries? Phenomenal move. Now 33,500. Now, at 25,000, you would have said perhaps the stock is expensive, how to buy. And at 33,000, what do you do now?
No, but see, these are stocks which are expensive, which will get more expensive. Again, if you're talking of something like Eicher Motors, these are stocks to be just, held on, until you really see something fundamentally going majorly wrong with this. Even after that, I think it'll give you enough time. So these are those stocks to be just held on.
Take a look at TI Financial Holdings. Someone suddenly placed in an order. It's a huge move on the stock. 7% up on TI Financial as we speak. That's a late mover, but it's really moving.
I think Anisha is alerting us to one more such move. I think AIA
Engineering. Yeah, 6% suddenly.
Yeah, I think it came out with numbers, if I'm not wrong. And it's, of course, been a good stock. been a good company, but stock up 6% right now. So that's the other one. Mid-cap market has been good today. Absolutely no doubt about it. Ashwani, your thoughts on the overall mid-cap rally? It's a decent rally. I remember, it was what, 2 weeks back that we were discussing whether Nifty Junior ETF was a good investment, and you had said that perhaps was the good time. But you reckon this rally has legs in the broader market?
See, my sense is that this year will be different from last year. Mid caps will not run up like last year. Rates are going up. Cost of capital is not favorable. So this year is more, I think, a large cap year, and that's what we are seeing mainly. So yes, mid cap exposure should be there, but get into the non-leveraged, better mid caps. I don't think you should be expecting big returns. Yes, this is a time to accumulate at some point. Inflation cycle will turn, etc. But mid caps, I see underperformance this year.
Okay, well, I guess we are coming down to the close of the day before the midweek holiday kicks in. Just 2 minutes to go. Anuj, I guess whichever way we look at it, right? Large caps, mid caps, the way banks have done, other leaders have done. Good comeback by this market?
Yeah, good comeback. And what this market is telling you is that it perhaps is now priced in Turkey for sure, unless there's a massive contagion. Also, it's priced in rupee at 70 now. You now need to see if there's a bigger move. But across the board, buying is what you had today, especially on the index. The Nifty advanced decline was quite interesting because you had so many stocks doing well. The stock of the day today was Sun Pharma. 7% higher is what you had on Sun Pharma. It had 25 lakh shares trade today. So you're talking about 1,500 crores of turnover on Sun Pharma. Let's see how much of that gets marked for delivery, because that's going to be important. Of course, it's an F&O stock. It's a index stock, but 7.5% higher. Then you had Yes Bank up 3.5%. Sun Pharma's move was, of course, visible in other pharma stocks as well. Lupin, Cipla, Dr. Reddy's. Corporate banks did well. Once again, ICICI, Axis, Yes Bank, all of them higher quite a bit. The Bajaj twins, Finance and Finserv, very close to new highs once again on both of these. Reliance had a big move today, 2% higher on Reliance. I think, once again, that sort of that market cap battle. In fact, it's fascinating. Today, both Reliance and TCS are closing at a market cap of 7.66 lakh crores, both at same market cap of 7.66 lakh crores. That was the kind of move that you had, of course, on Reliance. On the way down, UPL had some news, so that was down about 2%. Larsen was down a bit, and oil marketing companies, Surabhi, were down a bit.
Okay, and on the mid-cap side, there is so much of flourish. You've got a 200-point up move on the mid-cap index. Start with some of the winners. HDIL about 11% on the higher side. Balakrishna Industries, these are result reactions for market really liking what they saw at the end of the first quarter. 9% on Balakrishna Industries, moving higher. DHFL's numbers have been very well received, 5.5% up on DHFL. There was some buying on a couple of the mid-cap IT names like NIIT Tech, even Emphasis, the stock we discussed, that's ICICI Securities pick, that was up about 2%. I did see Mindtree also higher by about 2%. Okay, so Emphasis did cool off towards the end of the session then. What else kind of worked for the market? United Breweries was on the buyers list. Pharma worked beyond the indices as well, so stocks like Wockhardt and Biocon between 2 and 3% depending on which one you're looking at. CEAT was also an interesting mover, 3% up. Balakrishna we've already discussed. Let's just look at the closing on maybe a JK Tyre and an Apollo Tyre as well. Of course, it was the move on Balakrishna with the high volumes that really took the breath away today. What else worked today? Some of the Adani group names like Adani Transmission about 3% higher. NCC's put on about 3%. Dabur has seen some incremental buying. Page Industries holding out largely positive. The MSCI index, India index inclusion was the news point surrounding Page today. So 3% up on that stock as well. Motherson Sumi, Sun TV, Bata. I mean, these are 2-3% gains, but then these are many of these stocks anyway close to the 52-week highs and only adding on more weight today. So that's how it kind of shaped up. I'll just look at if there's anything big. So there were the late high flyers, the AIA Engineerings of the world. Spark, of course, Sun Pharma, Advanced Research that moved higher. Thirumalai Chemicals was up and about. So lots of big names on the upside today. Downside, not too much to speak of. Allahabad Bank, definitely a big disappointment. IDBI Bank, I mean, what do you do? 30%, 31% GNPA is what you're talking for IDBI Bank. And then there were LT Foods and, of course, Vakrangi is all over the place. Today, the stock was down quite a bit. Reddington has some issues. They have exposure to Turkey. Part of their business comes from there, and therefore that stock was down about 6%.
Okay, so that's of course the market then. 207 points higher is what you had in Sensex. Let's take final thoughts then from our experts. Ashwani, what's the verdict for the day then?
See, the verdict is fairly clear that it's a strong market, it's absorbed bad news, and 11,500 should be a matter of days, if not on Thursday, possibly on Friday it should be crossed. So all sorts of corrections should be used to buy into the market. Chances are, Turkey has been absorbed even by global markets. So this looks like a small hiccup. The currency basically has adjusted. So let's see if we can hang around in this 69.50, 70.50 type of zone. I think the market can move on from currency.
Okay, Mitesh, you were not convinced in the morning. Are you convinced with the closing?
Yeah, I think what is positive is that the indices, at least the Nifty has covered the gap. So I think clearly that should be good. And while, we were not reading the index, I think the stock specific side, I think we had more of long buys, and I think that still continues. What I would agree with Ashwani, I think looks like 11,500 at least should be visited very soon. And Pharma and IT, and while the rupee has been depreciating, I think both these sectors will benefit, apart from the fact that there is also good news coming in from the stock specific basis on these sectors. So I think I would be quite positive over there, and I think look at momentum happening mostly in the exporters like Pharma and IT.
Okay, and finally, Ambrish, any fresh buy ideas, anything?
Ideas are there, but I mean, what I would like to say is the whole of 2017 was actually a domestic liquidity story. And that liquidity is still there, but it was not flowing in the last few months because people are afraid looking at the way the markets are going down. Now that we have seen a consolidation and moving up, this same liquidity will come back and has already started coming back because there is hardly any other option of investing other than equities. So unlike in the past, when we had seen people run away from the markets, this time it is very different. People have stayed back and are looking at investing fresh. And again, if you're talking of stocks, it's some of my old favorites like Jyoti Labs, Advanced Enzymes, which has come out with decent sort of numbers and started moving up. Titagar Wagon, Jain Irrigation also, I like the numbers this time. And my other favorite is Ashok Leyland.
Okay. All right, gentlemen, thanks very much for joining us. You have a good midweek holiday and a very happy Independence Day to all three of you. We're going to take a very quick break. On the other side, spotlight on the final bids for Bhushan Power. They have been opened by the Committee of Creditors, and there might be a surprise. Let's shift focus to a CNBC TV18 exclusive now. Sources are telling us that Prime Minister Narendra Modi, in his Independence Day speech, is likely to make a note of the Ayushman Bharat scheme, as well as some of the recent changes that we've seen in the goods and services tax regime, along with several other important topics. Tim C. Jaipuria is joining in with some of these details on what we may expect in the speech tomorrow morning. Tim C.
Yes, as we wait to hear Prime Minister Narendra Modi addressing the nation from Red Fort on the 72nd Independence Day, sources indicate that PM is likely to make note of rollout of Ayushman Bharat in a phased manner, the recent changes that have been made under GST, including the focus on MSMEs, aiming for corruption-free India and the ongoing fight against black money. He's also expected to announce benefits for about 32 crore Jan Dhan account holders, such as increasing the overdraft facility under the Jan Dhan Yojana from 5,000 to 10,000. Also, government officials indicated that the Central Board of Direct Taxes has sent an update on the action taken to fight against black money, the recent data on Benami transactions, whereas the Indirect Taxes wing of the Finance Ministry has updated PMO on the recent rate rationalization approved by the GST Council and the ongoing efforts to improve ease of doing business for MSMEs. Not just this, Ministry of Housing and Urban Affairs has also submitted details on Swachh Bharat. Let's see what is the vision that Prime Minister Narendra Modi finally presents when he addresses us tomorrow. Back to you.
All right, Tim C. Many thanks for that. Well, that's the update coming in from our colleagues in New Delhi. But let's come back here to Mumbai. Another big exclusive that we're tracking this afternoon. Final bids for debt-ridden Bhushan Power have been opened by the Committee of Creditors, and there could be a bit of a surprise in the pack there. Ritu is joining in with the details. Hotly contested this one, Ritu, and a big asset. So what's the latest?
Well, I think investors are more happy about Tata Steel not upping its bid than about who the actual winner is. But in this case, yes, there is a surprise this time around. In the first round of bidding, it was Tata Steel that had emerged as the highest bidder by far. But this time around, in the second round, we understand from sources that JSW Steel has actually upped its bid significantly to emerge as the highest bidder of the three that were in the race to acquire Bhushan Power. So JSW Steel, from its original bid of 11,000 crore rupees, has now upped it to 18,000, and in the final round to 19,700 crore rupees. Compare this with Tata Steel, that did not revise its original offer and still stands at 17,000 crore rupees to the lenders. That's as far as the repayment is concerned. And Liberty House, that also has maintained its bid at 18,500 crore. Now, it was always between the JSWs and the Tatas. Liberty was not really in the fray because they weren't able to convince lenders of their source of funds. So now it seems, with the State Bank of India's backing for JSW Steel, who are going to be supplying credit to JSW for this acquisition, it looks like JSW is the clear winner here. Of course, as we've seen in all NCLT cases, there's possibility of litigation from Tata Steel, but we're yet to hear that. 17th of August is the hearing at NCLAT, and the decision of the Committee of Creditors will be placed before the court.
All right. Thanks very much, Ritu, for that update. Well, let's move on an effort to attract foreign investment in the airport sector. The Aviation Ministry has proposed to change its model for new or greenfield airports. The model will now change from revenue-based to a per-passenger fee approach. Ashpreet Sethi is here to explain those details to us. Ashpreet?
Well, yes, all these proposals are being done to invite foreign investments in the airport sector. In fact, the Aviation Ministry is saying that a tariff cap has been ensured to make sure that more companies come forward as far as the airport sector is concerned. Remember, GVK, GMR are the companies that are already handling private airports, but the Aviation Ministry is looking at foreign players entering the Indian market now. The model will change from the revenue one, which is at present, to revenue based to a per passenger fee approach. That is what the proposal is. It has been put in public domain right now, and public comments have been invited till about August 28, and that's when a final decision will be taken, what will be incorporated. Now, what are these proposals? As per the Aviation Secretary, the concession period will be 40 years. Bid parameters will be based on a concession fee that will be given to the government, and of course there will be provisions made for a negative concession if the airport is not able to be managed by the operator, whoever takes over. There's a lock-in period for equity, which will be for 5 years after the date of concession agreement. Land which will be handed over, 10% of it can be used for real estate business. So the whole idea is to increase the non-aeronautical revenue services, which includes your land for real estate and food and other items. So it remains to be seen whether foreign players will be coming forward at all as far as greenfield products or airports are concerned.
All right, Ashpreet, thank you very much for that. On that note, we are going to take your leave, take a quick break. All the commodity market action is going to come up on the other side. Have a fantastic Independence Day break. Think about the country, think about the people who got us the independence. We'll see you with the markets again bright and early on Thursday morning.
Welcome back, and let's chat commodities and currencies now. But currency first, because that really has been the buzzing theme this week after what's happening in the global markets. Nothing less than a turmoil and the contagion fears which have led to other currencies declining as well. We have seen 2 straight days of record lows coming in for the Indian rupee. From 70.07, that's quite a bit of gaining ground that we've seen coming in for the rupee. But then, of course, there have been statements from the government saying on how there has been intervention and the kind of spend that the RBI has had to make from the forex reserves to defend the kind of levels that we have seen there. Well, he's also said that the RBI intervention won't help much to stabilize the rupee, and that also it is because of the global factors, and that they do not mind even if the rupee falls up to 80 if the other currencies are also falling up to those kind of levels. So there's plenty of global cues that the markets, of course, are working with at this point in time. Yesterday, remember, was the biggest one-day decline since September 2013, and today there has been a follow-through buying in the Indian rupee that we have seen. So that, of course, is the statements coming in from the Economic Affairs Secretary, who continues to defend the kind of decline that we have seen in rupee, saying that it's not because of the domestic factors, but purely because of the global factors as we see it. We also spoke to a whole host of experts on what this means for the economy and the rupee trajectory going forward. Let's hear them out.
In terms of real effective exchange rate, taking into account our inflation rate, plus the movement in exchange rate, and what's happening in terms of the trade deficit. I mean, it's not, there's nothing to be scared about, at the moment. I mean, it's under control, and our foreign exchange reserves are also very high. So we can manage it as and when we feel like. If you look at the total picture, you know, we have, so far as reserves are concerned, we have high reserves in terms of the, you know, the exchange rate movement, and even now, in terms of real effective exchange rate, it's not too low, and there is nothing to worry about.
In trade-weighted real terms, the rupee appreciated 20% for 4 years. In the last 6 months, it's only given up 6% of that. So even if we get some trade-weighted real depreciation, it's not the end of the world. In fact, it may be desirable for the economy. But at a minimum, the rupee will have to move with its trading partners. So if the dollar were to appreciate and our trading partners were to weaken, the rupee will have to keep in touch. I think we should not focus on absolute numbers like 70. I think they're meaningless.
It's a correction which is required to make our balance healthier. Our current account deficit has been worsening over the last couple of years. And across our current account deficit and FDI, we have $3 billion of outflow every month. Now, something has to correct there in that permanent balance. We can't keep borrowing fickle money to make up for this deficit. So at some stage, a rupee depreciation hopefully will help address the current account deficit. So we're not Turkey. We have ample macro and reserve firepower available with us. And I'm sure at some stage RBI will be there to calm the markets. We should just look at this as a healthy correction and hopefully look to make this balance a lot more sustainable.
Nothing to be really cautious about. The only thing to caution is that, people shouldn't get into a knee-jerk reaction. Things like 70, I mean, these benchmarks don't mean anything. I mean, how is 69.7 and 70 that different? The real danger is if people overreact. 70 is, given the situation, is not a bad place to be in. This is not a situation where you would be using the interest rate instrument.
Okay.
So if I was the RBI, I would just stay where I am because you need to bring a certain amount of calm back to the markets.
All right, that's all the experts, bankers and ex-governors telling us that there is no need to panic really, and these are global cues and perhaps not very sustainable. Jane Foley, senior forex strategist at Rabobank, now joins us to talk more about the same. Jane, hi, thank you so much. First of all, of course, much of the cues are coming in from the global markets, from Turkey, really. How serious a situation that is and how long impending impact of that do you see on the global currencies?
Well, it certainly is a serious situation, and I think we all know that if we've just been watching the market over the last few days. But I think the degree of seriousness depends. So certainly within Turkey, yes, it's amazingly serious, and it will carry on for some time. And I think the fallout of what's happening now could be felt for years to come as inflation needs to be pulled back into control. But I think if we look at the contagion and if we look at the impact that it's having on other markets, well, that could be a lot shorter lived. And I think there is the possibility that the markets over the last couple of days have been overreacting. If we look at the rupee in particular, well, it's quite easy to see why global investors have undermined the value of the Indian rupee. And this is quite simply because India, along with countries such as Indonesia, they have high levels of foreign debts relative to the amount of FX reserves they have. So when risk appetite it gets hit very harshly, well, these are the sorts of countries, currencies that get hit most. And then as the dust settles, the market again begins to look at domestic fundamentals. It begins to evaluate whether or not there really is a true reason for contagion. And I think when we look back to Turkey, what we see is a country which is relatively small. It's about the same size as the Netherlands in terms of GDP, significantly smaller, obviously, than countries such as Germany. And we begin to wonder about the actual impact and the contagion that a country of that size begins to have. So I think we are seeing some calm in the markets today. And I think as we go through the rest of the week, certainly through the rest of the month, more information will come to light about the real impact that a country the size of Turkey can have on both European banks and on other EM countries. And I think the markets will perhaps calm, and most of the tension will remain in Turkey, as of course it has been for some time.
Fair point. So what is your sense? Since you spoke about the India and Indian rupee as well, we have seen all-time lows for 2 straight days. Yesterday was a percentage point of a decline. This has been the biggest single-day decline since 2013, by the way. That was the last time we saw an all-time low on currency. Since you have a reading on India and rupee, what is your sense on how much of a further decline can we expect?
Well, you know, I'm hoping that there will be a little bit of a sense of normality coming back into the sessions over the next few days. Clearly, if the rupee stays more or less where it is, that's still an issue for the central bank. It does feed inflation. Now, you have a completely different situation in India to Turkey. You have a central bank that is more likely to take action, to take the right sort of action, that the action that investors will appreciate. In Turkey, the markets have been demanding for some weeks a very significant interest rate hike. That didn't come a few weeks ago. Now the market is demanding that the Turkish central bank does more in order to regain its credibility. And we know that the president doesn't agree with that. So a very different situation in Turkey as elsewhere. But it does mean if the rupiah stays in a weakened position, it does mean that there will be an onus on the central bank to potentially do more to fight inflation.
That point is well taken, Jen. We'll let you go at that. Really appreciate you joining us and giving us your sense. Well, that's yet another calm voice saying that while, of course, India has a high debt ratio and that is the reason we are more vulnerable here, but Italy will, Turkey will, of course, have to see years of impact from what's happening there. But other countries, and especially India, will, of course, see a very short-lived impact of what we are going through right now. Well, that's about currency, but we have seen a sure impact of what's happening in the global markets on the commodity space as well. Joining us to talk more about that is Prathamesh Malya. Prathamesh, hi, good to have you. We have seen a sure amount of pressure, especially come in for the metal space. And even as there is so much of global turmoil, the gold prices is something that anybody refuses to touch for that matter. So let's start with gold first. What's your sense on that?
Hello, Manisha. I think if you look at gold in 2018, I think in the real returns perspective, it is 8.5% decline. So if you would have put your money in gold at the start of 2018, the real return would be negative. In that sense, the shine in this metal seems to have lost despite uncertainties across the globe, whether it be US, whether it be China, whether it be the fresh situation from Turkey. I think gold is no more attracting investors, and that's the real reason. Despite being a metal which has been considered as a safe haven, is no more a safe haven, and hence no investment coming in this particular metal, and hence correction seems to be there. And shortly after 1,200 has broken in yesterday's trade, I think pressure is bound to remain. 1180 is what the near-term price looks like. As far as MCX price goes, I think a fall of 300-400 rupees can't be rolled out. But then I wouldn't be buyer of gold at these prices.
Okay. Are you buying metals then? Because while the fundamentals there seem positive, it really is about the global cues which are not supportive for buying of many of these high-risk assets, whether it's commodities as well. With the kind of moves that we've seen in the metal space, anything that really encourages you to go for long there?
I think, Manisha, in the entire scenario, although most of the global world deal with commodities, I think the real impact is like emerging market currencies, which has taken a hit purely because of the situation coming out from Turkey. And it is no more a commodities game. It is just like a currency game, which is getting spillover to other asset classes, whether it be equities, whether it be commodities. But in the metal space, I think the real fundamentals still remain there in picture. And I think specifically if you're looking at copper, I think the wage issues coming out of Esconenda mine is something which would really bring in some positive news and momentum in copper. I think on the MCX, possible around 1 to 2% gain from here on is what we're looking at. And the rupee terms, it translates out to be 430 rupees. But then that really does not change the trend on the metals. So yes, be cautious, look at the sentiment overall, and please follow Turkey. What is coming next from Turkey is something which clearly needs a close watch.
And of course, enjoy a holiday tomorrow as 15th August. Thank you so much, Prathamesh, for joining us and giving us that words of caution and, of course, those trading strategies as well. With that, it's all the time that we have on this edition of Closing Bell. Stay tuned for After the Bell coming up next.